Hello traders and welcome to another video review. Today is Friday, December 1st, 2023. The last month of the 2023 has just begun. So let's just take a look at the economic calendar for today. Remember, it's Friday, first day of the new month, last month of 2023. So what do we have here? As you can see, I got all of the most important data releases, and what do we have here is the HCOB Germany manufacturing PMI data. This data is scheduled for release 5 to 10. UK manufacturing PMI data. This data are scheduled for release at 10:30. ISM manufacturing PMI data. This data are scheduled for release at 4 p.m. and this is during the New York session. And we got the speech from the chairman of the American Fed, Jerome Powell. His speech is scheduled at 5 p.m. So, kind of a busy day, especially if you are interested in the manufacturing data in form of the manufacturing PMI across the Eurozone, two most important countries, and of course the USA. So this is what we got on the Friday. Let's just switch to the technical part, and we are going to take a look at the euro dollar. What's happened on the euro dollar is a clear example of a breakout continuation after of a correction continuation after the breakout below this short-term trend line. So the movement above the 61% of the Fibonacci retracement of the last wave down, which is the big thick line, black line on the chart, was a fake one. Market jumps above it just slightly because 61% was 1.0962. The local high was 1.1018, so it's not that big, around 55 pips. And then we got this reversal, confirmation to the downside, local support 1.0935 broken, another 1.0925 violated. The technical supports located at 1.08894 and 1.0888 has been violated. New local low 1.0880 has been made, and then we are doing some kind of a bounce. The next target for bears, of course, is the technical support. Let me just make sure that this is correct. There you go, 1.0853, and this is the low from the November 22nd. Then eventually the last resort for the bulls, 1.0825. This is the technical support as well. Now, upside is limited. Upside is limited with this intraday technical resistance, 1.0935, and this level here will now act as the resistance as well, 1.0943. So this is the situation on the euro. On the price, on the indicators, which is RSI indicator momentum oscillator, as you can see, we almost hit the level of the 30. The low was 31.45, and now we are trying to bounce. So we almost hit the extremely overbought market conditions. Then of course, the target in that situation, if you would have gone a little bit lower, the target would be 100 periods moving average, which is 1.0868. However, now we are doing the bounce inside the negative territory. Right, so the momentum is still weak, is still negative. The bounce should be shallow, and we should continue lower. If you take a look at this high, you can see the wave 1. Consolidation or correction wave 2, big wave 3, wave 4, and there is one more wave to the downside. That might indicate the termination of the impulsive wave progression on the 4-hour chart from the last swing high, then bigger correction and another push to the downside as well. So this is the situation on the euro dollar. Let me just take the screenshot of this chart, and we can go to another market. This time the another market would be the British pound, because we got some data on the British pound as well. So, for our chart of the British pound, looks a little bit better in terms of the price action than the euro dollar. However, it still looks slightly, I guess, bearish. Let me just zoom out a little. There you go. We got this level here. Let me mark it for you. 1.2732. That's obviously the swing high, but right now it's an intraday technical resistance, and the technical resistance in the short term. Then we got the attempt to break above this level, failed, local high 1.2726, and the downside movement occurred towards these lows here at 1.2606. Right now the intraday technical resistance might be considered at the level of 1.2663. Any breakout opens the road to the last swing high. Maybe it will be tested, but any failure here would likely indicate the possibility of a down move continuation. So for the day traders, this is the most important levels right now on the 4-hour chart on the euro dollar. This level here is not being that much let's say interesting for neither bulls nor bears. So 1.2606 is now still the technical support, and then there is of course the big technical support just below everything here. Let me just mark it for you so we know what is that that range. I need the rectangle pattern. There you go, and let me just make it green so we know what is this all about. So the green one, there you go, this is what I'm talking about. This zone here, this zone here is the key support zone for bulls. Any breakout below this zone would likely open the road towards the 100 periods moving average 1.2508, and then of course lower into the levels of the technical support of 1.2455. Okay, so please stay focused, because it's all about this level right now on the British pound, and any failure here would be very might have a very big consequences for bears. Yeah, so we will reverse towards the key technical support. So that's the pound, that's the euro. Let's take a look what is S&P 500 doing. As you can see, S&P 500 just went higher out of the consolidation, made a local high at 4,588. If we zoom out, you can see that this level here, let me go to the daily, this level here is very close to the yearly high. This is 2002, and the end of the 2002, the end of the 2021, the beginning of the 2022, roughly 4,810. Okay, this is the high from 2023. Okay, so we are very close to the 2023 high. There is still some room to the upside for the 2022 high. Nevertheless, it still looks like this market wants to test this level again. And now, if you consider the fact that we've done a very nice job moving towards this level without any major correction, right now there is something cooking here, because it looks like the market is under a very big pressure from the bulls. They want to go up. They do not lose the momentum. You can see it stays here. Now we have a pullback, but it bounced from the level of 47, and then we immediately bounced towards 59. So it looks like the next target for bulls is still to the upside, is the high of the 2023, and as long as this is the target level for the bulls, we cannot say that the uptrend had been terminated. Okay, very nice reversal in S&P 500. Last month of the year, we might see some erratic movements on S&P 500, most likely back to the upside. So please stay focused. Keep an eye on the moving average and the last high, 4,586. Keep the eye on the technical resistance and supply zone located between 4,599 and 4,612. Okay, any violation of this level would likely mean that we have the new yearly high, but it might be a fake breakout. So it's very important for the bulls to break above this level, of course, and then stay above it, because the pressure from the bears will be big when we see any prices above this this level is 4,612. Okay, so please don't forget that ad would be expensive according to the RSI. Even on a daily chart, if we go to the daily chart, you can see that we are now testing the extremely overbought market conditions on a daily. So it is expected, because as you can see, this is the extremely oversold level, 4,101, 4,558, 88 was the high, right? So that's completely different situation. And there you go, here there is a gap, unfilled gap. So a double top, anyone on S&P 500? Maybe, why not? But let's just figure it out later, and wait for the bulls to do the move, and wait for the bears to do the move. Any breakout below this level here, this technical support here, 4,400, is bearish. So that's the key level on a daily time frame chart, because after this we go towards the gap, and then we go towards the swing low. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.